Hey traders, what's going on? Jamie Saettele here. It is Friday and March 20th, and welcome to the Midweek Strategy webinar. Although it's the end of the week, crazy stuff going on. This is much bigger than markets, obviously, at this point. If you don't know someone that's been infected with this or affected by it, you will. There's a little crazy in our household. There's a teacher at some school two teachers got it at the school not far from me, and one of their students presumably has it. Well, she was playing with my son at our house last weekend before we knew she was, or before she was sick, before I knew any of this, obviously, but she has been sick, and then they won't test her because she's fine. She ended up recovering. And she's like 4 years old, but the whole thing is you pass it on to older people and stuff like that. So I don't want to be around like my dad. He's like 73, and this is nuts. Anyway, I just went on a little tangent there, but I'm assuming you guys can hear me. And if you can, then I will stop talking about this and I will start talking about the markets. Okay. All right. So the currency moves have been just out of this world as far as the speed of the moves, I guess. But this is what happens when the markets are in an extremely low volatility state for so long. I mean, by some measures, it was the lowest ever, and the moves that we've had from these haven't even. It's not like you've had one trending move. You've had huge moves. I mean, it really started last December. You had a huge drop in the dollar. Then we had a big move towards dollar strength, and that's what we're getting now. So we'll go to this Dow chart here in a little bit, but I want to look at DXY in euro. So stepping back and like taking kind of a bigger picture view here, I wanted to get a sense of where we might be headed. So this is here. Let's go to weekly. That's a monthly. Okay. So here is that weekly chart. Okay. The next logical place to go, it looks like to me, is 106.60. Remember with US dollar, right? And just the FXCM Dow Jones US dollar index, we were looking at maybe getting a pullback here, more or less now. And so you have to, if you want to draw this chart, you can draw it on arithmetic scale, not log scale. So trend line 2011, 2014, and extended off of the high from 2013. Okay, the center line, as pointed out in last night's post, we've had a lot of action around there. Go to a data chart here. Now we're a bit above it. We had a reaction. I mean, you got a reaction, but as far as this being sustainable to trade to the downside, I'm not so sure. Here I can throw this on there and get more precise. So, okay. So you see here. So we have reacted. My bet would be that support is going to be somewhere down here. So 12.650 might be a level for support if we're going to get yet another run in the dollar. The real answer here is no one knows. I don't know. No one knows. But this is a good level to trade on. So I am looking for a bounce in currencies against the dollar. So I'll pull back in the dollar right down, maybe around 12.6, something like that. 12.660 would be a level. All right, so let's go to DXY. Back to that. So again, this is going to be mostly euro, right? But if we did get some sort of a pause, and wanted to buy weakness DXY, the obvious level is probably about 100 spot 60, okay? And that's just kind of old support over here, all right? And then again, the 106.50 area is important. So that's simply this channel line extended from the high back in 2016. Could probably put another one actually on this right here. So that would be a level 2. But just from a very long-term historical perspective, the 106.50 area does look kind of important. I mean, big high up here, 89. All the trading up around here back in the 70s. So that's where we might be headed. Here's a euro chart. I'm going to show an actually longer term one than I showed yesterday. And here you go. Let's get the full history of the euro all the way back to the 70s. So here we had that sink, low volatility drop, and then the absolute surge, into last year, and then another drop, and then an absolute surge again. And now we're back, on the dollar rampage. So when I look at this, I did say 105, 30 is that weekly reversal support level, right? That would just be the close of the low bar, right? Which is 105.29 from Jan 2017. It's also the center line if you were to draw the channel this way, okay? And this is on log scale, so it's going to be different. It's going to be different than arithmetic scale. So center line 2, which you see was resistance back in 2016, and that would be a level to pay attention to. And it was also resistance before the breakout in 2017. You can see right here, 3 weeks on it, and we just gapped up through that median line. Had a very strong move. So if we were to get there, that's where I would pay a good deal of attention to euro, and that's 104.90 would be a level. In terms of resistance, tough to pinpoint that. I really am not, care too much until we get to 104.90, frankly, in euro at this point. But they could be there on Sunday night in this market. I'm not going to have anything to add on in terms of resistance at this point in euro, other than just saying draw a short-term trend line. Okay, and if we were to get there, that's probably where you look for resistance. So that could be up near, it'd be close to 110. I mean, it could be 109.80, and then 104.90 are the two levels that you'd look at in terms of viable levels to potentially trade. Okay. All right, so there's that. So DXY, look at euro. Let's go to the long-term picture on the British pound. All right, I think we actually hit 114.17, didn't we? Or 16, excuse me. What was the low yesterday? It's a daily chart, or the low today. That was the level we were looking at. Low today was 114.14. We ended up trading all the way up to 119.34. That's pretty nuts. All right, so that was the level that we did have marked down for support in cable. Really long-term chart. And it is the 88.6 retrace of the rally from 1985 to 2007, okay? And you can see that The other fib retracements, at least some, have done pretty good work at identifying decent pivots, right? You've got the 786. We spiked down below it at the lows over the last couple of years, but the 618 was really, really solid in terms of being supported for the financial crisis, okay? So when we look at pound did hit a level today. Let's see if we have anything on the volume end, and we really don't. It's actually interesting. So despite these gigantic moves that we've had, volume has picked up, right? You can see here the average is 20, the black line's 20-day average for volume. However, we haven't seen, enormous spikes in volume. Like yesterday, or 2 days ago, I should say, in pound, we were 33% above the 20-day average in volume on pound. You would expect, or at least I would think that if you had a move of this magnitude, right, like a panic move like that we had 2 days ago, or even today's gigantic spike and then pullback, you would think that you'd get a better volume reading, right? And maybe for that reason, I'm not so sure about that we've had capitulation. I mean, look at the volume, for example, back on 12/13, where it was the high, right? It was all the Brexit stuff was going on back then. Look how much more volume we had back then. That was substantial compared to now. So without extreme volume, you're not going to have potential for these, bigger capitulation levels, and therefore we're not, going to get big signals to potentially, get indication of a larger turn. So maybe it just hasn't happened yet. I don't know, but I do know that, as mentioned, that we did hit a very big spot in cable yesterday or overnight. So you're not going to see it in futures market. You'll see it in the spot market because we did spike lower, right? Very early last night. So that would have been what, during 5, 6 p.m. here after the close. So I don't know. It's a level that we've hit, and if cable's not going to not go any lower, then it's a great spot for us to rebound from. Total guess at this point, rather than you're just buying the level. But if we start to get a little bit constructive price action on a near-term basis, maybe get above VWAP off the low, I'd be interested in British pounds on the long side. But that's another thing too. I mentioned this the other day, but this dollar move right now really tightens credit markets, right? Because it makes all that dollar denominated net more expensive, and you're not going to have any relief in the other markets, right? Like credit markets and equity markets, until you get the dollar to stop this rampage. If they really wanted to try to do something financially, they should probably just do a huge FX intervention, a coordinated bank intervention, which could be something that we get over one of these weekends. Frankly, I would not be that surprised if we were to see something like that. People talk about the Fed potentially buying stocks and stuff like that. That's never going to happen, but they will do. If they do a coordinated intervention, that would be, and for the dollar, that would that would do a lot of relief. Provide a lot of relief to the markets in general, in my opinion. So it's probably what they should do. Anyway, all right, so there's cable. That's also why being short, these currencies right now against the dollar, I think could be quite dangerous, because you do have potential for that intervention given how extreme the moves are and have been. All right, let's go back. So pound, bottom line, huge level, we've hit it. Okay, great. What now? I don't know, but if, again, we start to see short-term action improve, then there's an opportunity there, right? All right, let's go to Aussie. This was another one from a couple days ago. Did not hold that at all. We're closing below it on the week, not a good sign. Wanted to see us close above it in order to have any shot at a low, and that just has not happened. So let's see if there's anything else on this really long-term chart that would suggest the possibility, at least, of some relief. Yeah, this is going to be the same spot there too. That's pretty nuts, huh? So really nothing. There is nothing to work with in Aussie at this point. I mean, absolutely nothing. So I guess that's the last thing to look at. I mean, I mean, really. Um, yeah, I mean, unfortunately, this is just a disaster of a move right here for the Australian dollar, and I don't see anything until 47. I don't know if that means you want to necessarily be shorting right here, because again, you got to do it at the right spot because you're getting huge moves. I mean, we had a big move all the way up towards 60 last night. You know, like things I'm doing today, you know, and that's how you're going to catch a big move is, you know, identify a short-term level, get into it, and, you know, you might get lucky and catch one of those, you know, 3, 4, 5, 600 pip moves in a very short amount of time. But in order to do that, you're going to have to take a bunch of small losses. And, you know, we had it identified here. For example, Aussie came in today right here. We held that VWAP off the low. I took a long position, quickly stopped out, but that's all right. You know, identify very, very short-term opportunities. And in this environment, you're not going to need, you know, to hold the trade for very long, probably for it to work, you know, and quickly and get a very large move in a short amount of time. All right, Kiwi, I think, is an interesting one from last night's post. Okay, monthly chart. So this is arithmetic, not log. And you can see why I would do arithmetic. So this is log scale, right? Well, on log scale, it doesn't, the upper parallel did not touch up here, right? On the arithmetic scale, we did. So we touched on arithmetic scale. You can see how great that resistance was up there. And why would I care about that? Because that, you know, it's great, Jamie. You can look in the past and see where it was. Well, because that tells me that the market's respecting or has some respect for this, you know, this fork or this structure, if you will. All right. You can see even the center line was decent support on a number of occasions. This May and June 2010 flash crash back then. You know, May 2004, actually, this is subtle but very good action here, touching that median line and consolidating, and then going through, hitting, you know, the 75 line, pulling back to the median line. You know, the market knows that this level's there. And so I would be looking at potential, you know, for a bigger turn here in Kiwi. Again, we've got to get, you know, maybe near-term constructive action. You know, and on that, I'll be looking at, say, these futures charts. You can see why, too, I went with Aussie today rather than Kiwi. Because Aussie was holding its volume-weighted average price from the low. Kiwi was not. Okay, so that's why I didn't really, you know, look at trading Kiwi. It was just the Australian dollar. So we've got that. Did have a good reversal here. That would have been at 2,300 hours. That would have been a nighttime here. Probably would have been sleeping. So that's why you weren't alerted on that one. Let's see on the 4-hour charts what we've got. Yeah, it had 4-hour reversals too down here. So it's not out of the question that Aussie and Kiwi, which you can see did have these reversals on those lows. Again, those bars would have closed at 1 a.m. my time, so would not have seen them at the moment. But we did, and if we, you know, drop and try to make a higher secondary low here, then certainly we'll have the opportunity maybe to play something on the long side. So as of right now, the way I'm looking at it is I'm just looking at these really long-term charts, understanding that we've hit, some significant levels, and I'm, then looking for clues on the short-term charts to see if any of it sticks, right? See if we've had any sort of reason to, make a purchase on the short-term charts. All right, let's go to dollar yen. So simple here. I don't think this one triggered today. We were looking at 111.80. I don't think we got it. We got 111.50. So no, but that still could be one to pay attention to on Monday. And that's pretty much that. That's that. So I am looking for some resistance in dollar yen up here. All right. All right, how about some stock market activity? So this has just been pretty incredible in terms of how these levels have been playing out. So again, monthly chart, right? Showed this a lot, but monthly chart, 1932.82, channel off the 29 high, center line, and if we look and see levels that have been hit, level off of the 2007 highs, right? Resistance in 2018, resistance again here. The support that we hit this week, or the level that we hit, I can't say. Actually, I think you can say it was support. I mean, we did bounce from it, not a huge bounce, at least not yet, but parallel off these lows, 2012. And then the red line really is actually just slightly lower. So like if we were to make a new low, you'd pretty much be there. It would be the high from, what is that? The high from August of 2016. Green line there, I should probably make orange so that it matches Trump's face and the colors of his skin. But here we have that. So there is the Trump closing price. And that, what I mean by that is that's where the Dow was the day he was elected. Okay, so that nice orange line there is the Trump closing price, and that is 18,590, we can call it. So again, we closed spot today, closed cash at 19,174. So you don't have that much in this market. 2,000 points. Again, that's not, could be just a day away. But look at that red line. So like, look what else we go off of. The 87 highs right there, all right? And then the 93 high and all of that stuff. So my point being is that we are at a really big level, okay? Also, the question's been asked to me by multiple people where, if we had say a full on crash, like, an actual 20, like a limit 20% day, right? Like where could we go? Well, look, if we had something like that, first of all, how much lower is this? I want to see how much lower this is. So today's closing price is right here. Okay, that would be another 30%. So you'd have to actually have a couple days of that to get there. But that level is going to be like 13,100. And you can see what that is. That is this whole channel. That's the 25 line. If you just look at a closing price in a weekly basis or something, look how important that level's been. 87, crashed into it, based, went higher, right? It was support 86 on the way after the blowout. It was also support back in 2009, in March of 09. So that, is a major level. And you can see as well, you get the high over here from May of 2008, secondary high. So my answer to people, where's the next really, really, really big level, like huge level, like crazy big level? And to me, it is right there at 13,130. All right, and I'm looking at the Dow here. Actually, the Dow's been the cleanest in terms of the longer term levels are concerned. You know, I know the S&P and the NASDAQ are really kind of what you probably be trading, but as far as how channels have worked out and the levels have worked out, it's the Dow. And you know, there's a lot of reasons for that. I mean, the large industrial companies, look what Boeing, right? For example, has been huge in the news. So this is going to be more reflective of that, say, than the S&P and certainly the NASDAQ, which is going to be more tech heavy, of course, still is. But that's my Dow chart. You can still look at the S&Ps, which we'll do here. So again, the Trump election level is 2163 on the S&Ps. You know, frankly, if I just go to a daily chart, you know, it's been, you know, pretty much flat, you know, over the last several days. I mean, the low still was on Wednesday at this point, right? But really, if you look back to this week, it's got, you know, it's kind of a wash. I mean, this was last Friday, right? Big up Monday. Yeah, oh, sorry, big down Monday, big up Tuesday, down Wednesday into a low, up slightly, and then kind of all over the place today. But you know, if we did get another low, you know, again, talking 2163.93, it's levels we've been talking about for a little bit. That would be the next spot. But that's going to be here, and the big resistance I still think is up here. I still think you're going to get one of those big crazy moves to the upside. The question is, do you get, you know, how low, you know, before that happens? Is it just like a little, you know, 2160.90 area, or are you talking, you know, all the way up towards the 2720s there? So, you know, I'll be watching the Dow, be watching to see if we get any volume reversals and things of that nature. Obviously, I can go over all kinds of, you know, indicators, or so to speak, and see, you know, like how extreme things are. Like, for example, this is the 10-day average of the put call ratio. And again, when this is really high, that is going to 1.31. That means that investors, traders, what have you, market participants are buying a boatload of puts, right? So you can see how high it is right now. So let's see, the other times in history have been this high. We weren't even this high in 2018, the December 2018 low. We did get to this level in 2015, August 2015. We had at that point we had a low, a consolidation, a big rally to the upside. You know, got kind of close to 2011. I'm not sure. This has to be some sort of an error right here, because that's just an outlier. Other than that, I mean, you know, 2007, couple times, you know, I mean, we really didn't even get there during the financial crisis. But yeah, that's extreme. Another thing that's extreme, and I've talked about, I provided charts on this, but it's probably a good time for an update, is the advanced decline lines, right? So current 30-day advanced decline is minus 630. Holy. So let's just do a minus 600 and see where we are on that, and we can scroll back. Okay, so do I have that at minus 600 yet on this? What this means, by the way, is so it's a 30-day, it's just advanced decline line. So it's advances minus decliners, that net average over 30 days, okay? And you can see, like today, for example, right, we were minus 370. So actually today, breadth was like not bad at all. In fact, we've turned up in the McClellan oscillator quite substantially, and the 10-day oscillator quite substantially, because what happens there is you get big numbers start coming off. So it's just a function of the math. But okay, minus 600. So if you see a huge magenta dot, that's going to mean that you have minus 600. All right, let's see. actually did not make a new low in breadth today either, which is kind of interesting. Okay, so here you go. Financial crisis period, right? Obviously minus 600 for a duration or most of October, essentially all of October. Once in November, you had a big rally one day after that. You did have it at the low in July 08. You had a decent bounce from that spot. And then we had one actually in August of 2007. We actually went back to the final highs after that. So, you know, 2 of these 3 scenarios, you got big bounces. You know, this would seem to be more of a panic area where we are now. It's obviously quite different because, you know, by this point in the financial crisis, we were well into a deep bear market, and, you know, real fear had been setting in for quite some time. That's not the case right now. You know, you still have, I mean, just anecdotally speaking to people, a lot of people still, you know, I mean, don't, you know, don't seem too frightened. I mean, maybe it's starting to get there, but you know, for example, I get friends who are, you know, wealth managers and whatnot, and they say they've started to get a lot of calls and people freaking out and wanting to sell stuff. So, you know, maybe maybe we're starting to get there a bit, but so, okay, those periods. Other than that, what else? Oh, here you go. Back in 1998, we did have that. That was obviously, it was either the Russian default crisis, might have been there, I'm not sure. And that's it. All right, let's look at the NASDAQ one now. So the NASDAQ is currently minus 690. That's nuts. So let's just do minus 690 and see if there's actually, oops, any other time in history that we've had that, because that's a crazy number. All right. Once to financial crisis, low in October of 08 is it. Up periods throughout the tech bubble burst, each time was a low. So this would seem to be a pretty good indicator potentially, right? Would suggest we're close. So it, you know, if I look at, say, the, let me pull this up, hold on. NDX, all right, here you go. So NDX has yet to get to its, you know, we're still kind of sitting on this. I mean, you've broken it, but we've, you know, we've been below it, we've reversed above it, now we're back below it. So, you know, this, we're really just trading on this trend line, the grand scheme of things at the moment. But bigger picture for NASDAQ, I still think that you're going to get down towards 4,000, give or take. And that would be, you know, obviously a substantial decline, but that would be your wave forward drop from up here. There is the next big support though at 59.05. And that would be a 60% drop from the highs if you went to 38.88, which would make sense. Fibonacci, 60% off the highs. So again, this is the really long-term NASDAQ chart, right? Some point you will get a rally. Let's not forget, you know, I put up that comparative the other day with the Qs. Oh, excuse me, not a lot of sleep this week, but you know, even during the bursting of the bubble, the tech bubble, right? I mean, you still had big moves on the upside. I mean, you had tradable lows, right? You can trade, you know, from the long side and make even more than you would in a bull market, trading in a bear market. So it's obviously very hard. Risk control, capital preservation is key, right? Because if you lose your chips, you can't play the game anymore. So, you know, I'd still be looking for bigger moves, especially with that advanced decline 30-day thing that I just showed you. Okay. All right. I guess we could take a look at maybe some commodities. Should probably look at gold and stuff. Gold's just consolidating for the most part on its very long-term support. And I just, I don't know if it's going to hold it or not, but. All right, so here's that shorter term chart. Trying to hold. I still think you could get up here, right? That would make some sense to me. You could get a move up towards that, let's call it 1590 to 1610, something like that. That would make some sense to me based on a number of factors like fibs and, just levels, upper parallels, this level right here, maybe we're talking more like 1585, whatever, but all you got to know is that you are holding support for the moment. That support is longer term in nature, right? This is the center line of the entire move, the entire history of gold since Bretton Woods, so that's really important. And yeah, I think that as long as you're above these lows that were, again, from, what was that, from the 16th, so that would have been that would have been Monday, I suppose. What was that? I can't even, what day is this? Yep, that was Monday. As long as you're above there, we got close today, but we held it. Risk to me, trading risk is on the upside. So that's where I'm looking for in the interim. Silver, a little different, right? Silver's been hit a lot harder, as you would expect in a crisis like this, because silver is an industrial rather than just precious metal. And silver is interesting because if I pull up a weekly, this is a channel from the high, right? All the way back to the 2011 high. And guess where we closed the week? Right on that center line, okay? So eventually, you're probably looking all the way down towards, 8 and change for silver. And that's going to be the life of commodity trend line for silver, obviously roll adjusted, and lower channel line. So that's a big level. Essentially, we're talking about going all the way back to the 2008 low from the panic days of October of 08, and then tagging that support, okay? And that's where your next big buy may be for silver. But there's it's a long way down. In the near term, I'm probably wanting to be a seller. I don't know if we can get back up towards this neckline, but if we did, it'd be interesting to see if we could get a short up there. So that neckline is just the line off of these 2015 and 18 lows. Okay. Something else that we're going to want to monitor throughout all of this is going to be the gold-silver ratio, which I'm assuming is at an all-time high, and it is. So that is going to be a level that you're going to want to pay attention to as well, or a chart, a number, I should say. Let's see what we got here. Pretty interesting. Even, basically this ratio, you could go to 180, and that might indicate, by that point, you would expect silver to be down near that 8 level support, right? Gold silver ratio, so we'll say 180. Okay. Wild stuff right there, huh? Okay, let's look at crude oil. Thought we were going to get more out of this bounce. We still could, of course. 1, 2, your third wave, and if we get a bounce to 4, and eventually down into 5. So maybe it's something more like that. I don't know. Maybe we consolidate a great deal. Either way, if we drop down to this channel next week or something, I think I'd probably want to be fading that. Like, in other words, buying that level or getting bullish on that level. And that's going to be, you know, well, the line's 1830, but the fib is 1743, and that's going to be much more in line with this level from 2001, right? So either way, I would pay attention to this chart, know where crude is in relation to those levels. This is copper, which has just been absolutely destroyed, as well as you would expect in a situation like this. And in fact, copper today was not a great day, because even though you did recover off these massive lows, so copper spiked higher into the median line, which was then resistance. Okay, copper might just be straight down from here as well. So if that's the case, you're looking at a $1.59, $1.60 copper at some point over the next, you know, I don't know, couple weeks, something like that. But that's where, as long as you're, you know, under today's high, that's where you got to look for copper. So I don't know, maybe Aussie's not going to get, I'm out of here anytime soon, but we'll see. You know what? I realized that I forgot to look at dollar CAD, because I love that long-term chart on dollar CAD. It's very interesting. There you go. All right, monthly, ding, ding, right? Weekly, came pretty much off of that level, pretty solid, right? Hard to say exactly. I think it's a full channel extension from here as well, or a half maybe. So yeah, we came to that, and you can see the pullback actually held support at the top of that channel. So near term for dollar CAD, I don't know, just with that level, I don't like when you see that. That's why I look at these really long-term charts, and then you can really screw yourself up by looking at these other charts. So, you know, if I go to the weekly chart again, right? I mean, this is a hell of a level. I mean, look at that trend line, 1976, 1991, big resistance here, right? Back in 2005. Didn't quite get there in the financial crisis. We did get there and blow through and reverse, a lot like bonds in the 2016 period. In fact, that's a really good example of kind of what I'm looking at with bonds. You see, when you broke through a level, right, crashed back into it, closed below it that next week, and then the week after that, we ended up having resistance right there on the high. Okay, and then we fell apart. So something, you know, this is huge. I mean, look at that. That's not a joke, right? Back up towards this level, I would look for resistance again. Other than that, I think you have to look to be a seller of dollar CAD here. And I did actually want to, I don't want to forget this. I'm going a little longer than I planned, but that's okay. There's a lot to talk about. So let's pull this up here. But the seasonals are actually quite favorable right now for the Canadian dollar. All right, so here you go, right? We are into a favorable seasonal period for the Canadian dollar. In other words, negative dollar CAD, right? Aussie, also in a favorable seasonal period, really through the next month or so. Kiwi is as well. Pound is as well, and up through basically April, I should say. In fact, April is historically the best month of the year. Euro, obviously bucking the seasonal trends here, but still have a seasonal wind at our back and may have gotten some capitulation here, some of those big time levels, notably pound and Kiwi and CAD do not have the level yet I would need or want in Euro. And Aussie, not so sure on that because it's broken pretty much everything. I know Pooja here mentioned a couple of big retracement areas. So maybe, we could, I don't know. We'll see, but I don't have anything on the signal front just yet. Excuse me, I have the hiccups. All right, so that's it for me right now today. And I'm gonna wrap this up. I will archive this. I will have it for your viewing pleasure if you'd like to watch over the weekend to get, maybe go over some of these charts or something. Other than that, really from a human standpoint, be safe, be careful. This is not a joke. This is a scary thing that's going on out there. I know we look at markets and all that, but this is quite serious. I know some people are affected. My own family may be affected here, so be careful. All right. Okay. Have a wonderful, safe, happy weekend, and I will talk to you guys next week. All right. All right. Take care. Pooja saying, real quick, Euro versus commodities. Yeah, I will look at that for sure. That's a very good point, Pooja. I will look at that and see if there's anything worth posting for the update on Sunday evening. All right, take care. Bye.